The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the 26th of December edition, and I hope everyone had a wonderful holiday yesterday. Thank you, Tom. Thank you, Steve. 2 great hours, 3 great hours. And we have programming all the way through today. We've got Nico and Paige today. Friday. It's confusing, isn't it? Friday today, Nico and Paige on your health and living a primal lifestyle. Great show. And, of course, we've got program all the way through. Now, let's just do a couple of things here. We've got the Dow making, this is really interesting. Let me show you this chart. Making a new recovery high. It went above Wednesday's 18,086 level. It went all the way to 18,103. I typed in here for my subscribers. I see resistance in the 18,090s area. We're at 18,087 right now, up 57. You've got the Dow. Yep, the Dow is making its 1, 2, 3, 4, 5, 6, 7th consecutive higher high bar for leg A. We haven't made a peak A yet. And what does that constitute? That constitutes, in my work, the start of a buy signal that goes to a buy mode. The price itself, because it's at an all-time high, essentially says buy mode. And the implication is, doesn't tell you how high, but it does say that we should be going to at least a peak D, and that could take you no less than 7 more sessions. So that takes you into January. That's if every single day from now on, we see a lower, higher, higher, high, lower, higher, higher, high to make those legs and peaks. The S&P is at 2,091. Now, this is going to be very interesting. Let me show you this chart. This is what I show my subscribers every day. That's the 120-minute volatility index. See that cup formation? And you see this arch formation, but it's incomplete in the 120-minute daily, 120-minute Dow chart. Why? Because it made a peak B on Wednesday. Implication is that even if you pull back, you should still make a C and a D before you get a deeper decline. So essentially what this is saying is, right there, that we should continue, maybe it's today, maybe it is Monday, but we should continue to slightly higher highs. I say slightly, I don't see a big expansion at this point. Just in fact, today's high is 10,103. I would not be surprised if we don't break 10,115, 10,120. Make leg D over the next couple of hours or Monday, and then we start a pullback, and the VIX index starts to rally a little bit. It's at 14.43. I can see it going to the 15s, maybe touch 16, and then come back down again. The S&P has continued. Now this is interesting. 2,086.73, 2,087.56, 2,091.77. Still leg A. Both the Dow and the S&P and the daily charts are in leg A. Yes, you could contend that we're making a V-shaped pattern. No, I don't think so. This is just way too powerful. Every single pullback is barely intraday. Pullback much has always had bias. So we're looking at good chance the Dow and the S&P will still continue higher into about the second week of January, let's say. Now, we've got something even more important than that. When we're looking at the numbers, the E-mini has gone to a leg C. So it's quite a bit ahead, actually, and they're just nominal. Look at this. Peak A was at 2,076.25. The next day at 2,076.00. 25 cents, and then you make leg B. Leg B goes to 2,084.50. You had last night, is that what's counted? 24th. So wait, on the 24th, And then on the 24th, sorry, that was on Tuesday, the 24th, you go to 2,083.50, $1 lower. And today you've gone to a higher high. So very quick. Now, this is a Chapman wave squash pattern. It says you can get to a C, and then you should have somewhat of a pullback as the stochastic pulls back a little bit from 95%, and the MACD fast moving average takes over. But you've got a rectangle formation here. Let me just raise this rectangle formation because, no, I'm going to leave it like that. What it's saying is we're slightly above. There's a good chance that at some point over the next 2 days, we'll start to test, instead of 2,086, we'll be testing the 2081 to 2079.75 area. That's what I'm expecting. So let's get rid of this for now. Quickly continue with the numbers because I would very much like to go to our first caller. So here we go. We've got gold is up. First composite index is up 27 to 4,800. You've got gold up 20 points at 1194. And that's interesting. Why? Because the dollar, look at the dollar. DXY, this is a dollar index, very close to making a leg D, which would be above 90.16. 90.70 SARS leg D. And at that point, the dollar is on a short-term level somewhat toppy. Is this a brand new A? Is this a continuation pattern? We don't even have to think about that. Stochastics are 91%. The MACD is good. The weekly chart is really good. And the 120-minute chart is in A, B, C. Yeah, I can see this all playing out where the dollar pulls back some. So maybe the gold is having its first pretty decent rally in some time, but I think that that's going to fail very soon. Let's go on. We've got TLT. I did not discuss this very much the other day. Had some emails over the weekend. Actually, last weekend I was only able to get to yesterday and tonight. Last night, the TLT made a 127.72 peak D in the daily. It made a peak E in the 120-minute chart. It made a peak D. It's making a peak D this week. If by this afternoon it doesn't break 127.73, which is impossible. It will not do that. So this is going to be peak D in the weekly, leg D in the monthly. Fascinating period we're in for the bonds. I think the bonds are in a trading range. I think the upside now is a little bit limited, but actually so is the downside to the 140s. It's at 143.5. Okay, we're going to go to our first caller. We've got Will in Newport Beach, California. Will, how are you? I don't know. It's Garrow. Hi, Garrow. Garrow. I said sir? Will because it's WLL that you want to look at, right?
Yes, sir. WLL is I've been looking this for the past a month, and I stick to that chart and that symbol, and I go long and short and long and short and so forth until it gets out of fashion. Here, if you bring that WLL, the monthly chart, daily chart,
yep.
Let's say 3 months chart, you will see that this been come from all the way from the bottom from $25 and 24 and change. Now it's just at the junction of 5-day and 21-day.
Okay, so I just needed to ask you, you've been in this, are you fabulously short for ages, then you started to take some long positions. Is there anything are you in it now at all?
No, sir. I was in it from $32 until day before yesterday was $36.
Okay,
so I'm out of it.
And I had a little problem with my headset on Wednesday, but I still did the analysis for you. And what I said is I was pretty sure that hadn't spoken to you, but from the chart pattern that I was looking at, I was pretty sure that you'd taken profits.
Yes.
That you were looking at it, you weren't in it again, and that if you were to get in it, my suggestion at that time was to try to get in at last week on Wednesday. When we looked at it, it was somewhere in the 33.80 area. It pulled back to 33.76, and my recommendation was using the 9-period moving average as a good example of support at 33.28. I would buy it closer to that level, but it was starting to act very nicely, and the chances are that your best trade was on the long side for this having been smashed to the downside, because I like the fact that it had 4 consecutively higher highs after it made that low bar, and that was saying that it wasn't just a one bounce quick move to the upside and then a sharp pullback. I still said that I'm not sure that it's out of the woods, but as a trade on a shorter-term position, the chances of going closer to the 36 to 39 area is way better than breaking 32. But if it started to mess around in the 32 level, I'd say, hey, be very careful, because it mustn't be there for more than an intraday couple of bars, 120-minute bars, and then it has to be going up again. And that's kind of what it's doing. So here's my recommendation. Now, I know that trading-wise, you're pretty much done for the day on this. Would you get into another position today or not?
No. No, okay. I'm waiting to see that. If that, you see, you don't use 21 days. I use 21 days. Even if you look on, if you put that 21-day simple moving average and 5, you'll see that the whole month of November, it's just the 5 and the 21 was just crossed. I mean, the 5-day could not cross the 21-day, and this is the same scenario again. I'm afraid that on Monday or Tuesday somewhere, if that 5-day does not cross the 21-day, again, it's going to be a big short for this stock.
Okay, so here we go. I'm putting in the 21. I'm going to change the color. I'm just changing the color so that I know what it is. Make it a kind of a bluey color. There it is. And I'm going to make it a little bit thicker just so that I know that this is the one I'm using. So here we go. Okay. So, wait, I've got the $21 at 36.70. 21 EMA. No, 21 simple moving average. Okay, so it'll still be...
21 day and 5 days. Simple. Both of them are simple.
Okay, simple. So, wait, what do you get the price at? It must be fairly close. It must be around about 36.20.
I get 34... it's around 34.97.
Oh, okay. All right. Big difference. Let me just check this one here.
Yes.
Okay, I've got a 14-day, and that 14-day right now is at, I can't see. 14 days, about 34.80. Okay, so this is what I'm going to do to you. I'm going to say, I'm going to take this one. I'll leave it there for the moment. What I'm looking at here is based on the 120-minute chart, the consolidation has been very shallow. I thought it would pull back somewhere into the candle. 32.68 is the low of at 11:30 on the 22nd of December. And I thought it would get somewhere into kind of towards the 32.90s, maybe 32.80s. I don't think it'd go down as far as that. I do not want to see it at 32.20. A close under 32.20, you'll say, uh-oh, it's starting to fail again. Now, this is what I'm looking at. Because you haven't got, you're done on this one for the day, my recommendation would have been that you just nibble at it closer to the low is 33.71. It never really got to the level I would have looked at. But having held there, it looks to me like it is trying, it's attempting to retest the 35.58 high of the 21st. So here's my suggestion to you.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rose, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. I forgot to mention that. Well, first of all, I did not hear the break. I was busy talking over the sound of my earphones. My mistake. I did see my clock. Didn't look at it close enough. So we're on at this particular point with Garo in Newport Beach. We're looking at WLL, which is Whiting Petroleum, and Garo is out the stock. I'm looking at the 30-minute chart, and it's got an ABC, DE, then pulls back and goes A, B, C, D, E, F. Now it's pulling back. It had pulled back. Now it's walking the 9-period moving average. This particular chart is a 30-minute chart, and what I did is I made a big deal about this 200% exponential moving average as key support, and that support is at 32.93. So let me do this, Garo. I didn't change any of my settings. I've got a 21 EMA on the daily chart. That's at 36.71. You've got the SMA, which is lower down, but I have a 14 EMA, which is at around about 34. 80 something. So what I'm looking at here is that this stock is holding very well. Monthly chart looks horrible, but it is above the 200-period moving average. Let me move the 120 minutes away. 120 minutes away is suggesting that it has somewhat limited upside right now without taking a little bit more of a breather. But at the same time, I would not be fighting the trend right now. It's attempting to get to the 35.80 to the 36.50 area. So the way I would look at it is on Monday, if there's a little bit of a pullback by the end of the day, which I think is going to happen in the Dow chart, at some point we'll get that leg D in the 120-minute chart, but maybe we get a bit of a pullback before then. I'm not sure if it's going to be intraday today or whether it starts off on Monday. But most importantly, what I'm looking at here, I keep saying, on WLL, Whiting Petroleum is trading at 34.70, up 45 cents. It is trying very hard to push away from the 200-period exponential moving average in the 30-minute chart. You can see from this chart how tremendous the resistance was, and then it broke out, and it hasn't even come close now back to that as a support level. So that's why I'm saying the 32.20 to maybe 32.80s should be very strong support. So here's my recommendation. I think it'll be another trade for you if it can pull back towards the end of the day, or may have an early morning dip on Monday, and that will allow you to have another bounce, and that bounce should take it to leg B up, and leg B will start as soon as it goes to 35.59. That'll be a penny above the peak that was made of A, and that'll start your leg B. Now, will it go to a C and a D? At this particular point, I think it might make the C. I'm not sure about the D in the daily, because the first effort it's had of trying to have a rally, and it's not done anything other than made A minuses for weeks and weeks. So this will be the first time. So it should go to a B, maybe a C. So I treat it as a trade. I think it's starting its formation of attempting some kind of a basing area, and that basing area will, of course, be to the low of 24.13. So I don't know if that fits your scenario, Garo, but that's kind of the way I'm looking at it right now. That it looks very much like it wants to go a little higher. Percentage-wise, that'll be actually quite a bit, but not much in points. And then we're going to get the real test of whether the weekly chart is sustainable for a nice strong leg towards the 39s, if it can get through that 36 area. I don't know how that fits in with what you're looking at. I'm not sure if Garo's there. Maybe Garo's gone, oh, okay, Garo. Well, I'm sure you're listening, and it kind of fits the scenario. I wouldn't be surprised if it kind of fits the scenario you're looking at. Okay. Well, thank you for calling. Always appreciate it, and have a great weekend, Garo. And I'll be watching this. It's on my list here. Now, there's a couple of things that I'd like to do. One is IWM. IWM was the leader earlier this year. Then it became the laggard, and now it's kind of, in a way, a leader in that it is breaking to all-time highs. Let me just see, 120.97. It needed 120.98. No, it's at 120.66. It is 30 cents away from is that an all-time high? 30 cents away from an all-time high. And what I'm going to recommend right now is, for those of you who are long the IWM, there's a pattern that I call the Chapman wave squash. And that shows you between the stochastic here at 94% and the MACD that there should be a powerful move that takes you to leg A, and then it takes you to leg B, and then it takes you to a slightly higher leg C, and then it starts to fizzle. And at that point, the stochastic pulls back. If it's still holding very strong in the 90% or upper 80% level, that's really positive. But basically what happens is that the baton gets taken over from the torque in the stochastic to the momentum in the MACD. I'll talk about that, plus my talk on Tuesday night at the Boston Investors Group. I'll be back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. Let me just continue with my thinking here. I'm going to free think for a moment. I'll go back to the IW shortly. I just had a couple of questions and I want to answer them. Here is that H to M pattern that fails in the crude oil. That makes next month absolutely imperative. Why? Because it should be this month or next month that is the final test to be able to get back above in the continuous contract above the 63.98 level of February of 2009, and then you can have a decent rally, and that rally will be the test of where crude oil is going in 2015. But I can just tell you this: if crude oil fails to break above 59 in January, 59.61, close above that monthly chart is going to look terrible. Look at gold contract. Look at all the commodities. They have the same kind of pattern. And gold looks the same. The commodities are not. This is not a period for the commodities. It's not that inflationary scare. Not at the moment. And because of it, you're looking at very good things happening in the stock market. And bonds are holding up pretty well. And look at the dollar when I look at the longer term. The dollar's holding beautifully. It's broken out of all that resistance on the left side. The next level is 92.63 from way back in November of 2005. And what did I say it was? 92.63. It's only 2 points away, 2.5 points away. But that's kind of what I'm looking at. And support is tremendous between 88 and 86 in the intermediate term. So let me just get that out the way. Then the question was the IWM. IWM daily is in leg B. Very powerful move. Should go to C and a D, number one. Number two is the weekly chart is in C, but until it breaks into the 120.98 or higher area, I still have to consider that it's a retracement failure mode. That's not to say it will fail. That's just to say it's under the previous major high. And because of that, it says it needs to snap through. It'll be the third time. This is an inverse cup and handle. There's the handle. Here's the huge cup. So this is going to be very important because this kind of pattern says there should be very strong resistance in the 121 to 122 area. So far, it's acting beautifully in leg C, says it should still go to a D in the weekly chart. The monthly chart will break out. I mean, this has made a peak F top in the Chapman wave in the monthly chart. That should have been devastating, but because the general market has been the only place to go, look how it's held. It's held, and it's now challenging the previous high. So far, a beautiful candle, but the month is not finished. And now you've got to look at whoosh, going above it with the doji candle being a halfway marker. And that, again, is also pointing to higher prices. So 124s, 122 to 124 would be an upside target in this particular phase. All right, I did that. Now the other thing is natural gas. So I'm looking at NG. This is natural gas chart. This is a commodity, and commodities are not doing very well. Not doing very well. That's an understatement. A, B, C, D in the monthly chart. Natural gas has gone, the continuous contract, to a peak A. It's gone to a peak B from the low back in 2012. It's gone to a C, and it's gone to a D. A D in the Chapman wave is where you expect. You don't have to get it, but that's where you can expect a deeper retracement. It made the H pattern that's failed. It made an M pattern that's failed. Now it's making a very large arch formation. Natural gas says the low that was made at 2.736 back in April of 2012, watch out, because if it closes underneath these key supports on the left of 2.89 and 2.85, that's going to be a problem. Now, I know for a fact that we're going to have a wonderful winter. We're going to, at least for me, because I went and bought another snowblower. I only get the lightweight ones. I'm not allowed to do anything heavy, so I just get something to be able to get the driveway, long driveway, steep driveway, done before my wife goes to work, and then my guy can come and do whatever he wants. I just need to do that. And I bought one just a week or so ago, about a week ago, and it's like when you get your car washed, it rains. So that's what I'm doing. We have not had snow in the Boston area, and we probably won't have it until 2015. Well, that's okay. Maybe I'll buy another one next year and we won't have snow. Anyway, not for those of you who love skiing. So now let's go to, so natural gas, I'm going to UNG now. It's not the ideal, but it's pretty close to a pretty good semblance of an ETN that can track natural gas. And I've got here left side, right side price time match. I don't usually like these, particularly the H to M pattern, but this one's so far perfect in that it's saying that this is the month, December, to retest the left side low of 14.25. If it doesn't break down, it says January could start a bit of a rally. I say a bit of a rally because at this particular point, will it take out the high that was made back in week of 21st of November at 23.73, trading now at 15.40, the UNG? This is the United States Natural Gas Fund. I don't know if it can do that. It'll have the whole of the winter to try. But in the meantime, back at the ranch, hey, this is a horrible chart pattern in the in the monthly chart, but we need to go all the way through until, what is it, Wednesday, the last day of December. So I'm not going to discuss the monthly as concluded. I can say the weekly is just about to conclude, and it looks, well, I was going to say ugly, but that would be just too polite. It looks devastating. It looks horrible. And isn't that interesting? Because this is wintertime, and some parts are very cold, but not here in the Northeast. So that's what I wanted to do there. So we've done with the question there. IBB. Now, we've got some fantastic longs in our portfolio for my opening call. They are just fabulous percentage gains, 28, 35%, just huge gains at this particular point. We have taken some profits off. However, and this is going to be very important, looking at the chart that we went, looking at the IBB today, I thought it would be a good opportunity to go short for an instrument this morning. We went short and we took a $1.20 loss on a $46, I think it's $46 stock. So percentage-wise, hey, that's just not a big deal at all. I don't like losses, and it's a big deal if this is what you were trading. So I don't like to say, oh, we made so many gains. This, who cares? Yes, I care about the loss, because if that's the one that you took, you lost money. And I'm upset about that. Why? Because I feel very strongly that I believe that the IBB, the biotech iShares, have made a pretty substantial, I'm not going to say significant top right now, but a substantial high bar of 319.34. I don't think that's going to be taken out for a little while. I think it has to digest. And will it become back as the favorite for fund managers? They'll attempt to do that. They're doing it right now. They did it on Wednesday. They're doing it again today. But I think that this downtrend line that I've notated right here, I should have had patience actually to wait for a test of 306 to 307. Today's high so far, 306.56. And maybe it should have gone a little bit higher. But I don't think that this is going to have the gusto to break to the top. We failed at a peak B minus before. Here's another leg B, maybe a B minus. We'll see. But that was a mistake. It was my fault. I was a little impatient. I don't think it's a bad trade. It was just a bad entry point. At least this is what my thinking is right now. So that's the IBB. Look, you got Amgen, a very key component, and it's doing beautifully. Look at this, Amgen. It's not doing beautifully. It looks just like the IBB. It was earlier this morning. I thought it was above the 9 EMA. So now it's only up 257. BIIB is Biogen, IDEC, Biopharma. Yeah, you know what? I'm pretty convinced that this is a real problem, that it's bumped into strong resistance. So all I'm going to say is, I'll be giving a talk on Tuesday night. Let me get it right here. Talk, where's the talk? Right here, is that it? Nope. Is that it? Yep, right there. Okay. Formerly the Boston Investors Business Daily Meetup Group, Boston Investors Group Holiday Party Meeting, Building E51, Room 315, 70 Memorial Drive, Cambridge, Mass., right across the river, Tuesday, December the 30th, 7 p.m., this was posted last week, early in the week. So far, 52 are going, and there are 5 days left. So this needs more updating. And in the meantime, back at the ranch, so I'll be the guest speaker, and it's the annual holiday meetup. They always have a lot of fun. Really great questions. I get into stuff that normally I don't have time to do, or I just don't get asked, or it's just not an area that I spend time on during my show, but it's something that I think about. So it's going to be a lot of fun. I come on at about 8 o'clock-ish, somewhere around there. And Jeff Orick is the organizer, and he does a fantastic job getting everybody whipped up. So, and it's actually free. Once in a while, they'll send a hat around because there are expenses, and very often Jeff actually just picks up those. It's not fair that he should just pick them up. So just maybe they'll pass the hat, but they don't usually. In the meantime, back at the ranch, if you do want to come, and maybe you even want to bring a couple of sodas or a box of cookies or something like that to munch for the party, that's also great, but you don't have to. So I'll be really looking forward to seeing you. This is the Tuesday night, December the 30th at 7 p.m. I do speak to them fairly often during the year, And this is one of the meetings that I often host, is the final meeting. Oh, I didn't do it last year. That's right, because I was not well, and I could not do it. I did it a little later on in the year. So, yeah, this will be the annual party, and it's always fun. So let me get out of that. And now let me show you something else. When I'm looking at the bonds, U.S. dollar, this is a continuous contract. Made a peak D at on the high was a continuous contract, so the price will change, but it's 146 and 1930 seconds. It's the date that's important and the chart pattern that never changes. But the actual high numbers and low numbers do change because it gets smoothed out. So the 16th of December makes a peak D, pulls back. Now I think we're going to have a pattern that says consolidation is going on. There's a chance that the weekly chart is, no, there's not a chance. It's absolutely for sure that by Friday today at 4 o'clock, you will not make a new recovery high of 146 and 30 seconds. So this is going to be what I call peak D in the Chapman wave. The MACD is at 76 under 80% in the daily, 46% 46% in the daily, 76% in the weekly, and 81% in the monthly. Now, this is what I really wanted to show you. Look, excuse me, look at this. Little hiccup there. That cup formation. We've seen these cup formations before, and you get a pullback and a breakout to the upside. Is this cup formation one of the last in a major 30-something year bull market in bonds? You know what? I think that the Fed has the capability right now to at least maintain the status quo so that it could pull back to 137, maybe 136 over a period of 3-4 weeks. That's going to be the test if it starts to close for 2 months out of 3 under the 9-period moving average. I'll be watching it real closely. Look at the way this up channel, which really goes back a long time, 20-something years. Look at this up channel. It keeps hugging the inside, Chapman wave inside track buy zone. But this is the very first time that it's gone all the way from an A to a B to a C to a D and then an E in such a short period. It did it before back in 06 from the low of May, there's a monthly chart of May of 2006 to peak E in January of 2008. So that's 1, 2, 3, 4 years, 3.5 years, 3.25 years. Now you've got just 3 years, less than 3 years, and you've gone from the low that was made September of 2013 to this month. So we're going to be watching that. Talking about monthly charts, let me just show you this, and we're going to go to our next caller. This is the 43rd month. Leg E, 43rd matching month in the monthly chart. If we close decisively in the 18,150s or higher by the end of the month, I have to say that there's a good chance that this leg E will continue higher into January and February. Let's go to Nick in Oklahoma City. Nick, how are you? Hi, Nick.
Hi, I'm doing just fine. How are you?
I'm good, thank you. You'd like to look at?
WLT.
Do you have a position?
Yes, I got in recently, and to me it looks like this stock is either doomed to be completely be gone, or probably to recover to, I would say 5s and 6s. And I was wondering...
Mm-hmm. You know, I love the way you this is, since you got into it, you know exactly what Nick is saying, that WLT is not Walmart, that's WMT.
No.
This is Walter Energy, which has the exact opposite chart. Just as Walmart's going to highs, or was going to highs, well, this is at $1.58. It made a low just recently of 1.28, and I think that getting in right here is your best risk reward. And I suspect, I don't know about the 5s. All I know is that to really manage to go higher, it has to break into the 173 to 182 area, 183 area. The moment it does that, then the left side, the first key moment will be, how does it try to get to 208, the high of the 11th of December? But in the meantime, I don't have to tell
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Learn about good health and fitness. Living a Primal Lifestyle with Nico and Paige. Next on TFNN.
Hi, folks, we're back, and we're back with Nick in Oklahoma City. We're looking at WLT. So this is what I'm thinking. This is the first opportunity that WLT and stocks like it, and we're going to get another talk about one straight after you, Nick. I think that you got in perfectly, at least for risk reward. This is what I'm going to suggest. Because it's the first time that it shows the potential with the MACD and stochastic acting well of actually holding up, there are going to be two fighting patterns. The one is the arch formation. I'm drawing it in here. And the other is either a V shape or a cup formation. I'm drawing it in there. And that says that what you really want to see is by Monday afternoon or Tuesday, at least a test of 1.71, somewhere around there. It doesn't have to hold. I'd prefer if it holds. So congratulations. I think you got in very nicely. Handle the risk. If this starts to pull back, you've got a gain right now, so I would not risk taking some money off at some point, just to reward yourself. But at the same time, you're talking about a percentage gain or a percentage loss on any tiny movement. So be very careful.
Okay.
I like the fact that you're in here. I think your risk reward is good. And let's look at it again maybe next week, Tuesday or so. But great. Nice entry point, Nick.
Will do. All the best in the new year. And, if I don't talk to you.
Okay, well, thank you very much for calling and good luck with this. Let's go to Brent Martinez. Hi, Brent, how are you? We've got a moment here. Let's do this.
Oh, I'm doing great, Bals. I'm not going to rush you through this. I think what I'll do is I'll just call you next week when we have a little bit more time to look at it.
Okay, so let me just mention it's the same situation but a nicer-looking chart pattern, and that's Vail, which is in the petroleum area. All right? So what we're looking at here is, and the MACD is good, the stochastic's good, it's in leg C, very quick A to B to C. So what I'm looking at is the chance that it's going to try at 825 VALE. We'll try for the 830, 845 area, no, 848 area, and then it might pull back a little bit, but the big test is going to be at $8.10 to $7.90. Can it hold that and then move on higher? So, let's look at it again next week. So far, you've got a nice trade, nice position, and your risk reward is improving all the time. Okay, thank you. Have a great weekend, and Happy New Year, Brent. We'll speak to you next week. So let me just do this. Thank you very much. We've got Nico DeHaan coming up, folks. He has a guest host, Jasmine Walton of Brandon and Paleo, and it should be, it's just, he does fabulous work. His newsletter this last week, I was reading it. There's just a lot of detail there. There's actually some stuff I want to go through with some of my physician friends and see how it relates, because just a lot of information. And thank you, Nico. So stay tuned, everybody, and have a great weekend. I think I'm beating the bell this time. Don't even hear it. But let's see what happens. This is the first time, so now I'm a little early. I'm waiting for noises to say I'm out of here. I'm not out of here. So the Dow's up 45, S&P's up 884, and better than the Dow, S&P's a little stronger. Meantime, back at the ranch, this is still a mega bull market, and we're still looking very good here on the long side. And I will be back on Monday. Check out my opening call. This is just a perfect time for it. I'll be sending out charts starting probably this evening or Saturday morning. And, thanks for being here. And I'm still waiting for my engineer to say, I have no idea. I don't even know where the sound is. It's still me, I guess. I thought I had everything set so nicely this morning. And I talked right through 2 commercials, and now I'm too early. I can talk about next show, Primal Play and Conscious Eating, and just a terrific show altogether. Now I bet the music's going to come on. Yes, I hear the music. All right, so I'm a little early there. What can I say? Hey, people say to me, how come you went from music to the stock market? I said just one word, timing. Well, I missed my timing today. All right, folks, have a great one, and thanks to my wonderful engineer for keeping me on track. Have a great one. See you Monday.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.